Welcome to Earnings Central. In this video, we'll break down Paramount Global's second quarter fiscal 2025 earnings. We'll cover key financial performance metrics and dig into insights from the earnings call. All right, let's go. Starting with top-line revenue, the original estimate for Q2 was $6.87 billion. The company actually reported revenue of $6.85 billion, missing expectations by just 0.3%. However, this quarterly revenue marked a 0.6% increase compared to the $6.81 billion reported in the same quarter last year. Moving to adjusted earnings per share, the original estimate for Q2 was 36 cents. The company actually reported an EPS of 46 cents, crushing expectations by 27.8%. However, this result reflects a 14.8% decrease compared to the 54 cents per share reported in the same quarter last year. Now, let's dive into some additional performance metrics highlighted during the earnings call. The most impressive metric from this quarter was the dramatic turnaround in direct-to-consumer profitability. D2C adjusted OIBDA reached $157 million, representing a six-fold improvement compared to the same period last year. This massive swing demonstrates that Paramount's streaming strategy is finally paying dividends. The company has improved D2C profitability by $300 million just this year alone, showing the accelerating momentum in their streaming business model. Paramount Plus continues to be the crown jewel, with revenue growth accelerating to an impressive 23% year-over-year. This acceleration is particularly noteworthy because it shows the platform isn't just growing, it's growing faster. The streaming service added 10 million subscribers over the past year, solidifying its position as the fourth largest global streaming platform. This growth trajectory puts Paramount Plus in direct competition with the industry's biggest players. The company's cash flow picture improved significantly, with free cash flow reaching $114 million for the quarter. While this includes approximately $70 million in restructuring payments, the underlying improvement shows that Paramount's operational efficiency initiatives are working. This positive cash flow generation is crucial as it provides the financial flexibility needed during the transition to new ownership under Skydance ownership. User engagement metrics tell an equally compelling story. Watch time per subscriber increased 14% year-over-year, indicating that viewers aren't just signing up, they're actually using the service more intensively. This increased engagement is a leading indicator of subscriber satisfaction and reduces the likelihood of cancellations. The metric suggests that Paramount's content strategy is resonating with audiences and keeping them glued to their screens. Churn improvement of 100 basis points over the course of this year represents a significant operational victory. Lower churn means higher lifetime customer value and more predictable revenue streams. Paramount achieved a record low churn rate this quarter with an additional 70 basis points improvement year-over-year. This retention success reduces customer acquisition costs and improves the unit economics of the streaming business. The company's cost discipline showed remarkable results with over $800 million in annual run rate non-content expense savings implemented over the past 4 quarters. These savings demonstrate management's ability to streamline operations without compromising content quality. The cost reductions span across redundancies and operational inefficiencies, creating a leaner, more agile organization that's better positioned for the streaming-first future. Now, let's shift focus to some of the key insights and takeaways from the earnings call. This earnings call marked a historic moment as the final report before the Skydance merger closes on August 7, 2025. Sherry Redstone's farewell comments highlighted the successful transformation of Paramount from a traditional media company into a streaming-first organization. The transition represents the end of the Redstone family's 4-decade stewardship and the beginning of a new chapter under David Ellison's leadership. Perhaps the most significant strategic achievement was that D2C revenue growth finally outpaced linear declines for the first time. This crossover moment validates the company's streaming-first strategy and suggests that the digital transformation is working. Traditional television continues to decline, but the streaming growth is now strong enough to offset those losses, creating net positive momentum. Paramount Plus achieved top 4 global streaming service status in just 4 years since launch, which is remarkable considering the competitive landscape. The platform accomplished this by focusing on quality over quantity in content creation, going against the conventional wisdom that more originals automatically means better performance. This strategic approach has proven more effective than simply flooding the platform with content. The content strategy centered on creating hits rather than volume has delivered exceptional results. Paramount Plus had the most top 10 streaming originals behind only the market leader, with shows like Landmen, Yellow Jackets, and The Shy and Mabel driving engagement. This hit-focused approach maximizes the return on content investment and creates buzz that attracts new subscribers while retaining existing ones. CBS maintained its dominance as the #1 broadcast network for the 17th consecutive season, with 8 of the top 10 series and 14 of the top 20 series. This traditional television strength provides a stable foundation while the streaming business scales. The network's success also feeds content to Paramount Plus, with CBS content accounting for nearly half of all viewing on the streaming platform. The company's franchise strategy delivered strong performance across all business segments, from Mission Impossible setting box office records to library content getting significant boosts on streaming platforms. When Mission Impossible: The Final Reckoning hit theaters, the franchise's library content saw a 60% lift in daily active subscribers on Paramount Plus, demonstrating the powerful synergies between theatrical releases and streaming engagement. As Paramount prepares for its next chapter under Skydance leadership, the company has successfully positioned itself as a streaming-first organization with strong fundamentals, growing subscriber engagement, and a proven content strategy that prioritizes quality hits over volume. That wraps up our recap of Paramount Global's second quarter fiscal 2025 earnings. If you found this recap helpful and want to stay on top of more earnings reports from other companies, don't forget to subscribe. We've got plenty more quick and easy breakdowns coming your way from Earnings Central.